Hey, so you found the house of your dreams, your offer was accepted, and you're ready to start the loan process. What comes next? There's a lot of moving parts that happen during the loan process that a lot of people aren't even aware of. There's people touching your file that you'll probably never meet or have a conversation with, but these are all things that have to happen for you to get approved for the loan. What can you do to prepare for the process as best as possible? You want to make sure that any documentation your loan officer asks for, you get back to them in a timely fashion. For me, that's 24 to 48 hours. Reason being, if there's something that you send in that's problematic and we maybe want to get different information, we can get that quickly from you. If you take 3 or 4 or 5 days to turn in documents and then someone has to review it just to come back and tell you, hey, I need something different, it drags out the loan process. Most of the delays that I've seen when someone's getting approved for their home loan come because they don't turn in documents fast enough. You can fix that easily by making sure whenever your loan officer or their team asks for documentation, you send that in quickly. Again, you send that information in quickly. Next up, how does the loan process work? How do I get approved for a loan? There's a couple of pieces of information that your loan officer should have already gotten from you up front, like your personal information so that they can check your credit, your employment information, your address history for the last couple of years. There's certain questions that they have to ask you that are required for people that are getting approved for mortgage loans in America. And then after that, they need to verify that information by getting certain documentation. If you're a W-2 employee, maybe that's your recent pay stubs. If you're self-employed, it's your recent tax returns for the last 2 years. We also may need to get other tax documentation like your W-2s, and we need to verify that you have the assets needed for closing, like your bank statements or retirement account statement. Once you turn in these documents, your loan officer can now package all of this information together and submit it to an underwriter. Once they have all of these information in underwriting, the underwriter is going to review your file, issue what's called an initial approval, and you'll be able to get your mortgage commitment. Mortgage commitments are due on a certain timeline per your agreement of sale. If you don't turn this mortgage commitment in a timely manner, per your contract, you could forfeit your deposit money. So it's super important, again, that you get your documentation in a timely fashion so that you can get your mortgage commitment back and you know that you're going to get approved for the loan. Now, once the mortgage commitment's issued, there may be some questions that the underwriter has for you that they're going to ask for additional documents. Make sure that you're quick to turn these documents in as soon as possible so that you can get final approval for the loan. Once you have final loan approval, which means the underwriter signed off on your file, the appraisal has come back at value with no repairs needed for the subject property, and a title company has completed a title search to confirm that there's no liens or encumbrances against the property that haven't been accounted for, we get what's called a clear to close. Clear to close means that we can schedule settlement, you can coordinate getting your check ready for settlement or sending a wire to the title company, and you're going to be buying a house soon. This is going to be a very smooth process if you turn your documents in a timely manner. Obviously, if you have any questions during this process, you want to make sure that you reach out to your loan officer or their staff and say, hey, why do you need this? Or I don't understand this. Why do you need this document? Because it's super important that you understand when you're handling in all this personal financial information, what it's being used for, right? In addition to that, as you're going through the loan process, you want to make sure that you're not making any large purchases, you're not making any deposits into your bank account that you have not already discussed with your loan officer. And of course, you want to make sure that no one's checking your credit unnecessarily, because all of these things have to be explained when you're going through the loan process. I've seen people who were getting a house and they made big purchases or they stopped paying something on time and their credit score dropped, and there was a period of time that elapsed between when they initially were pre-approved and when they got their final approval for the loan, and it ended up costing them hundreds of dollars in interest a year because they had a lower credit score and it meant that they qualified for a higher interest rate. So to avoid this, you want to make sure that you don't do anything that's going to change your credit history or change the amount of money that you have available in your bank account from what you originally told your loan officer when you got your loan pre-approval. And again, if you have any large deposits that you're going to be making, You want to make sure that you talk to your loan officer before that money goes into your account. Super important. If you do these things, you'll have a smooth approval process and you'll be able to get your home in a timely manner.